In this video, I'll be sharing with you how to use Fibonacci retracement in the stock market. And if you stay till the end of the video, not only will I be sharing with you the theory on how to use Fibonacci retracement in the stock market, but I'll also be sharing with you real-life stock market examples and how you can use Fibonacci retracement to make better and more informed decisions in investing and trading in the stock market. So if you want to learn all of that, make sure you stick till the end of the video. So before we begin learning about Fibonacci retracement levels, let me explain to you how using these Fibonacci levels can help us invest and trade strategically in the stock market. In one of my previous videos over here, I mentioned that if we want to maximize our returns and minimize our risk in the stock market, we want to invest and trade at strategic points. So what do I mean by strategic points? Let me show you an example. In an uptrend, we know that prices do not rise in a straight line. Instead, it follows a wave-like motion, right? So what do I mean by a wave-like motion, right? So when prices rise, it tends to rise up, then it falls back down, rise up, falls back down, rise up, falls back down, and so on and so forth, right? So this is a wave-like motion when prices rise in an uptrend, right? So where are the strategic points that we want to invest and trade so that we can maximize our returns and minimize our risk in the stock market? So those points are points over here, points over here, and points over here, right? So why do I say that these points are strategic points for us to invest and trade in? So there are two reasons why I say these points are strategic for us to invest and trade in. So the first point is that if we invest and trade at these strategic points, you notice that after we bought our shares, what happened to prices after that? Prices tend to rise back up, right? So if we bought it here, prices tend to rise up. If we bought it here, prices tend to rise up. And if we bought it here, prices tend to rise up after we bought our shares, right? So that's the first point. If we invest and trade at these strategic points, prices tend to rise immediately after we buy those shares, right? So that's the first point. The second point is that if we buy at these strategic points, do you notice that when we buy, we are buying it at a relatively lower price? Because if we buy it here, it is relatively lower than at this point here. It is also relatively lower than this point here, and is relatively lower at this point here, right? So the second reason that we want to invest and trade at these strategic points is that when we invest and trade at these strategic points, we are buying these stocks and these shares at a relatively lower price, right? So these are the two main reasons of why we want to invest and trade at strategic points in an uptrend. The same thing is true for a downtrend. So in a downtrend, prices do not fall in a straight line. Instead, it also follows a wave-like motion, right? So let me show you an example, right? So prices will fall, then it will rise up, then it will fall, it will rise up, it will fall, it will rise up, and so on and so forth, right? So similarly, when we are in a downtrend, let's say if we are shorting the market, so if we are shorting the market, we want to short the market at strategic points, right? So where are the strategic points in the downtrend, right? So the strategic points in the downtrend would be here, and would be here, right? So why are these strategic points, right? Because do you notice that if we have shorted the market here, immediately after we have shorted the market at these points, prices fall down, right? So if we shorted at this strategic point, prices will fall down. If we shorted at this strategic point, prices fall down immediately after we short the stock, right? So these are the reasons why we want to invest and trade at strategic points, whether in an uptrend or in a downtrend. So the next question you might be asking is, how do we determine when the retracement is over, right? Because you can see that here prices rise, then it retrace here, then after it retrace after a while, then it continue to rise. So when the retracement of prices end, prices tend to continue back its trend, right? So the question is, how do we determine the end of this retracement points, right? So that leads us to the Fibonacci retracement levels indicator. So using the Fibonacci retracement levels, we can identify these points at which retracements are likely to end with a high degree of probability, right? So how do we use this Fibonacci retracement? Yeah, two steps to using this Fibonacci retracement levels. So the first step is we want to identify the swing high and the swing low. Then after we have identified the swing high and the swing low, the next thing is we want to identify important support and resistance levels. So these are the two steps on how to use Fibonacci retracement levels. So let's take a deeper look at how we can use this Fibonacci retracement levels. The first thing is we want to identify the swing high and the swing low. So in an uptrend, how do we identify the swing high and the swing low? So the first thing in an uptrend is we want to identify the swing low, right? So this is the swing low. So what do I mean by swing low? So swing low is the lowest point at which the candlestick is at before it starts its upward movement, right? So this is the lowest point at which the candlestick is at before it starts its upward movement, right? So this is the upward movement. So after we identify the swing low, the next thing is we want to identify the swing high, right? So the swing high is this point here. So this is the swing high. So similarly, what is the swing high? So swing high is the highest point that the candlestick reaches. So is this point over here, the highest point at which the candlestick reaches in the upward movement before it starts to decline, right? So the swing low is the lowest point here before it starts its upward movement, and the swing high is the highest point at which the candlestick reaches before it declines, right? So that is how we identify a swing low and a swing high in an uptrend. In a downtrend, how do we identify the swing high and the swing low, right? So the first thing we want to identify is the swing high. So the swing high again is the highest point at which the candlestick reaches before prices start to decline in a downtrend, right? So that is the swing high. The next thing we want to identify is the swing low, right? So the swing low is the lowest point at which the candlestick reaches before prices start to increase. That is how we identify swing high and swing low in an uptrend and in a downtrend. So the first step is we want to identify the swing high and swing lows in the trend. After we have identified the swing high and swing lows, the next thing we want to identify are the important support and resistance levels. These are some of the important support and resistance level in a Fibonacci retracement, right? So the first one is the 23.6%, the second is 38.2%, the third is 50%, the fourth is 61.8%, and the last one is the 78.6%. These Fibonacci ratios are ratios that Leonardo Fibonacci noticed that occur repeatedly in our everyday life, such as in art, in architecture, in nature, and in biology. So these are not a bunch of random ratios that Leonardo Fibonacci thought of one day, right? These are actual ratios that Leonardo Fibonacci noticed happening in our everyday life, right? So let's take a look at how he derived these ratios. This is a Fibonacci sequence. So if you take a random number in this sequence, for example, if we take 21 in this case, and we divide it by the number after it, which is 34, we'll get 0.618. And if we take the same number, number 21, and we divide it by the number 2 rows after it, so we take 21 divided by 55, we'll get 0.382. And in fact, if we take the same number, 21 divided by 3 numbers after it, which is 21 divided by 89, we'll get 0.236, right? So if you take any number in this sequence and you divide it by the next number, you'll get 0.618. And if you divide it by the number 2 rows after it, you'll get 0.382, right? So for example, if we, instead of taking 21, if you take 55 divided by 89, we'll get 0.618. And if we take 55 divided by 144, you'll get 0.382, right? So you can do this calculation and you'll notice that you'll get 0.618 and you'll get 0.382. So these are the important support and resistance level, right? So the 23.6%, the 38.2%, the 50%, the 61.8%, and the 78.6%. So these are not a bunch of random numbers. These ratios repeatedly occur in our everyday life, like I mentioned, in nature, in biology, in art, and in architecture. And these ratios also tend to occur on our price charts, right? So let me show you an example, right? So this is the price chart for Visa, right? So how do we use the Fibonacci retracement levels? The first thing is we want to identify the swing high and the swing low, right? So for this case, we identify the swing high. So the swing high is the highest point at which the candlestick reaches. So this is the swing high. And then the next thing we want to identify is the swing low, right? So this is the swing low, right? The lowest point at which the candlestick reaches. After we have identified the swing high and the swing low, we can then draw our Fibonacci retracement level, right? So we will draw it from here to here. And then the charting platform will help us calculate the Fibonacci retracement level. In this example, I'm using the Think or Swim charting platform. Other charting platforms will also have their Fibonacci retracement level. So in this case, I use the Think or Swim charting platform. So after we have drawn the Fibonacci retracement levels, do you notice something? Can you see that prices tend to respect the Fibonacci retracement level? So what do I mean by respect the Fibonacci retracement levels, right? So if you see here, prices fell, right? Then prices find support at the 50% level. And then after that, it rise back up. Then it found support at the 61.8% level. And then it fell down. Then it found some support at the 50% level. And then it fell. Then it found some support at the 23.6% level. And then it fell to the lowest point here. And then after the lowest point here, it rose back up, right? And it rose back up, it found some resistance at the 38.2% level, right? So it found the resistance at this level, and then it fall back down. And when it fall back down, it found support at the 23.6% level. And then after that, it rose back up, and it encountered some resistance at the 50% level. And then it fall back down, it found support at the 38.2% level, and then it rose back up. Then it found resistance at the 61.8% level, and it falls to the 50%, and it found support at the 50% level, and then now it's finding support at the 61.8% level, right? So do you notice how prices tend to respect the Fibonacci retracement ratios? In this case, we see multiple examples of how prices tend to respect the Fibonacci retracement ratios. Now that we know the theory behind the Fibonacci retracement levels and we know how to use them, let's take a look at some stock market examples and how we can use these Fibonacci retracement levels to help us make better and more informed investing and trading decisions. Alright, so we are on my price chart. So the first example that we'll take a look at is MasterCard, right? So let's take a look at how we can use the Fibonacci retracement levels for MasterCard. So let's zoom in first. Right, so remember, the first step on how to use the Fibonacci retracement levels is to first identify the swing highs and the swing lows, right? So in this case, the swing high will be at this point here, and the swing low will be at the lowest point here, right? So we draw our Fibonacci retracement levels at those points. So we'll draw it here, and we'll draw it at and end it at this point here, right? So that is our Fibonacci retracement levels. So that is the swing high and the swing low, right? So after we have identified the swing high and swing low, our charting platform, so in this case, I'm using Think or Swim. So Think or Swim will automatically help me calculate the Fibonacci retracement ratios, right? So you can see that it calculated the 23.6%, 38.2%, 50%, 61.8%, and 78.6% in this case, right? So now that we have our Fibonacci retracement levels, let's see whether prices respect those retracement ratios. From here, prices decline, right? After it declined, it found some support at the 78.6% level, and then it fall down, and then it found support at 50% level, and then it rise back up, then it found some support at the 61.8% level, and then it falls back down, then it encounters some resistance at this 50% level, and then it falls down, finding support at the 23.6% level, and then it falls all the way down to the swing low, right? Then after the swing low, prices start to rise back up, right? So it rose back up, then it found some support at the 38.2% level, and then it falls back down, then again it found some support at the 23.6% level, it rose back up, then there's a resistance at the 50% level, right? So prices are encountering resistance at the 50% level, right? So it falls back down, it rise back up, falls back down, and rise back up. So right now, prices are finding some support at the 50% level. So can you see that for this example, for MasterCard, prices tend to respect the Fibonacci retracement levels, right? So prices either find support or resistance levels at this Fibonacci retracement ratios, right? So this is for MasterCard. So let's take a look at another example. How do we use the Fibonacci retracement levels? We first identify the swing high, right? So the swing high is at this point here. The swing low is at this point here, right? Then we will have the Fibonacci retracement ratios over here. So again, we can take a look whether prices tend to respect these retracement ratios, right? So from here, prices fell down. It found some support at the 78.6% level. Then it fell down, found support at 61.8% level. Then it rose back up. Then it encounters resistance at this 78.6% level. Then it falls down. Then it found support at the 23.6% level. Then it fell down. Then it reaches the swing low. Then when it reaches the swing low, it rises back up, right? So it rises back up. They encounter some resistance at the 38.2% level. Then it falls back down. Then it found some support at the 23.6% level. Then it rise up. Then it falls down. Then it rise up. Then it encounters some resistance at the 61.8% level. Then it falls down. Then it found support at the 50% level. and now it's encountering some resistance at the 61.8% level. This is the price chart for the S&P 500 or the US stock market, right? So right now, can you see that prices are encountering some resistance at the 61.8% level, right? So the 61.8% level in this case acts as a resistance level. Moving forward, for the US stock market, how are prices likely to play out, right? So right now, can you see that prices are encountering some resistance level at the 61.8% level? So once prices encounter a resistance level, what will happen to prices? Prices tend to fall back down when it encounters resistance. If you want to learn more about support and resistance level, check out my video over here, because in that video, I explain in greater detail on how you can identify support and resistance level and how to use the support and resistance level, right? So in this case, the 61.8% Fibonacci retracement level act as a resistance level, right? So when prices encounter a resistance level, what will happen to prices? Prices tend to fall back down, right? So can you see that so far, when prices hit the 61.8% level, prices tend to found resistance at this level. So using Fibonacci retracement levels, we can identify potential support and resistance levels and how prices are likely to react to these levels. If you have liked and learned something from this video, smash that like button because it will help the channel grow. And if you want to watch more videos such as these on investing, trading, and the stock market, make sure you subscribe to my channel because each week I release one new video about investing, trading, and the stock market. I'll see you in those videos to your financial success.